Hi YouTube. I have a little homework assignment for you. Yes, homework on the weekend. Hey, the Silver Institute just came out with their interim report for the silver market, and I would strongly suggest that you take a look at this. I'm going to actually link the PDF in the description box, and I will also link Moments in Trading. He did a great breakdown on this, and I would strongly suggest that you check out his video and look at how he interprets the data. But this is just very important. This report comes out twice a year. They have an interim report and they have a report that comes out at the end of the first quarter. So of course this is the interim report, and it's a mixed bag. Okay, and it's not a huge shock given the recent price action. They have a chart of the U.S. Silver prices. They also have a chart with silver, gold, and base metals. The silver priced in other currencies. I found this interesting, that the gold to silver ratio is smack dab at the average price that it has been the last 14 years. And so they go into the demand breakout. Now, Big Silver One brought up a really good point. I can't remember where he posted this. I did read his comment somewhere, that photography has obviously been in a precipitous decline as people move to digital, right? And as it shrinks, the amount that it affects silver demand is now each passing year it's going to be less and less of an influence on the silver price. So when you look at world silver fabrication year over year, coins actually has done really well. It looks like about 17 million ounces. Jewelry and silverware also had a nice bump. Looks like 12 to 13 million ounces. And industrial uses another 5 million ounces. And here you see photography going down. They have a chart on silver bullion coin sales. Jewelry and silverware demand. Upgrader also brought up a good point. I think I saw his comment on Moments in Trading's video, that as the rich are getting richer and have even more disposable income, you're seeing silverware shoot up as well as jewelry. And also, I mean, silver obviously is a cheaper alternative with jewelry than gold. And even when you factor in that maybe they're buying cheaper gold, like 10 karat, and silver is obviously part of a 10 karat gold mix. So they have the photovoltaic silver demand, and you can see that is been declining for 2 years. We'd like to see that bump back up. So overall, I mean, demand is strong. There is some growth there. It's up 4%. Now here is what surprised me. Okay, so they have some pie charts of the silver supply, and you can see that that mine production is a greater percentage of silver supply versus 2003. Really, it's government sales. Government sales is down to just about nothing. But here's what surprised me. Even with the lower silver price, the mines still produce 27 million more ounces than they did last year. Okay, and that is certainly not good news. We keep hearing about mines being in maintenance mode, and yet here they are with record production. Now, from a long-term perspective, this is a crucial point. Okay, the lower silver price drives less recycling. Okay, so scrap is down 20 million ounces. So really, only 7 million more ounces were added to the silver supply. Okay, but it's still an important point to note that the miners are still cranking it out, but there's less incentive to recycle. And here you see, it's really staggering when you see that since 2003, they're pulling 220 million more ounces out of the ground. You know, that's just a huge number, and they've passed 800 million ounces from mine production. And then when you look at the winners and losers in 2013, I was really shocked to see the United States as adding 6 million more ounces. You know, the Kennecott mine collapse, I thought for sure would affect U.S. mining this year, and it didn't. And you see Poland. Poland had a huge hit. That's interesting to me. And last but not least, so this is a good news chart. You see that the delta between the average price in 2011 and the cash cost was at its highest here. and you can see that continuously shrinking. Now, I'm not a big cash cost guy. I really focus more on the all-in cost. I think that's a better indicator, but this is a very important data point. But you can see a nice progression here of the cash cost price. It's okay. It's a nice march up here, and that, of course, does put pressure on the miners. So give me your thoughts, guys. Like I said, Moments in Trading did a fantastic breakdown on this. Is there anything in there that you saw that I missed? I'm just curious. All right. I'll talk to you later.